All right, ladies and gentlemen, I hope you had a wonderful day. I got another extreme watch list for you, but before we get into what happened today, and there was a lot, we had Powell and a bunch of other things, we got to talk about the bank stress test. This just came out after hours, and it looks like the 23 biggest banks, they passed with flying colors, meaning there was no problems. Now, I have a lot of fun facts associated with it, but if you're not familiar, ever since the great financial crisis, the 2008 crash, Dodd-Frank required the banks to undergo these stress tests to make sure that they are always well capitalized, have reserves, and can withstand anything. So what happened with the stress test today? Well, the scenario was for unemployment going to 10%, real estate plunging 40%, even the big banks like JP Morgan, Goldman, and Morgan Stanley even having problems getting funding and not doing good as far as hedging. This was all part of their scenario. Even a loss of $541 billion was projected. Even with all of this, the Fed said the banks are sound and resilient, and they passed. Essentially, their liquidity ratios and their capital ratios, it would not go below a certain level, and they would still be able to operate and withstand all of that pressure. So I have all the details on the screen. You could screenshot it. I was talking and explaining to you the basics of it, but now here's the best part about it. While you're reading or screenshotting, as we were coming into this event, a lot of people thought the bank stress test was not going to have a real big impact because before we were hearing anything about stress tests, we were just hearing about capital requirements on the big banks as well as the regional banks as a result of the SVB situation. So why that's important here, because traditionally the bank stress tests, when they come out and they come out with flying colors, it's usually a green light to unleash buybacks and dividends and all of that. But this time around, people are kind of being hesitant, saying, well, even though we passed it, we probably are going to have to face some upcoming challenges with that, so we're not going to jump the gun just yet. And now here's the other best part. As far as this stress test is concerned, they came up with the scenario and began all of this all before SVB. So take that how you please. Either way, the most interesting part about all of this, with all of the caution towards the capital returns, there was still a very positive reaction. JP Morgan, a couple of the other financials, they all did good. And like we said, all of the banks passed. So you could go to the Federal Reserve website. It's super easy. Just go to Federal Reserve, go down to news and events. It should be the first thing on there under press releases. And you can go through all of this because you could read the scenario and see which banks did better than not and where those banks stand. Again, they went over the top 23 different banks. So some banks did better than others. I'm sure we will see a reaction tomorrow. And there's probably going to be a follow-up as people start asking, well, what's the next step? What happens with the regulation and all of that good stuff? So that was your bank stress test. We will see what happens. But now, as far as what happened today, it was kind of crazy. It kind of wasn't. The big part about today that made it all interesting, I want you to see the moves before we get into any of the data. It was like a baby gap up. Then we started to go lower. Then right when the opening bell happened, we ran up during the speech. You had the Sintra conference with Powell, ECB, Ueda, Governor Bailey. It was the big four as far as central bankers are concerned. But as they were talking, the market was able to go up, and we'll get into the breakdown, but it's not like they were all speaking just positively. But the whole idea of today is I think you got a little bit of everything, meaning you've seen this little downturn after the consecutive upturn. Well, yesterday was our rally day. Today, we kind of held up. You had a little bit of downside throughout the day. You still got to see a new high. It was like the best of both worlds, kind of keeping you borderline pinned over the last 2 weeks. So the movement was very interesting. But now, as far as what happened, let's go to the extreme. So here is just the overall breakdown. You can see what happened with the dollar, equity, treasures, gold, Bitcoin, all of that. But the big thing you got to keep in mind, yesterday was a big rally. Today we were coming off of that. We had a lot of data. And one thing I kept mentioning all day today, there were big earnings in the morning like General Mills, and that had a big effect. If I could point out anything beyond that, because we're going to dive into it, if you want to look at the treasuries in the dollar did go up. But I was saying this one on stream, the bonds were showing strength. The yields were coming down today, but the yen got absolutely murdered. That doesn't usually happen, especially when there is a very large positive correlation between the 10-year bonds and the Japanese yen. So I brought this up live on stream. Oh, you don't really see it as good because of the news wire here. We're going to have to move him up there in a very weird spot, but this is the yen overlaid with the 10-year bond. 10-year bonds haven't been moving. The yen has been dying and creating a gap, and usually they start to fill in with each other. And like I'm saying, the correlation between these two is usually on point. There's periods where they break up, but eventually one of them comes together. But this definitely stood out today, and like I'm showing you here, as far as like the broadly speaking, that would have probably been the thing that stuck out to me, besides oil going up. And they said it was because of the data yesterday, even though it didn't really react positively to the data. But besides all of that, how we opened up the morning and everything else, we had the geopolitical news, or that's what they're referring it to it as, the AI stuff regarding the chips in NVIDIA. If you don't understand what happened, remember a couple of weeks ago, or even a couple of months ago at this point, the government said, hey, you can't sell powerful AI chips to China. So NVIDIA, they get 25% of their income from China. What did they decide to do? They said, we're going to modify our chips to make them less powerful so they don't qualify for that, so we could still sell them to China. And then that's what they kept doing. And now what was announced today, nothing happened per se, but in the coming weeks, we may hear some restrictions that would even block NVIDIA and other companies from selling these watered down chips. So we heard from that. That was a big deal. It affected the chip makers. But even when we did go green during the day, they were able to come right back up. But eventually, as the market came down, they came down with it. And I will add this. There's two things. One, NVIDIA came out, the CFO, they said this isn't going to have a material impact, but also this isn't just about NVIDIA. This is for anybody else. And even though we had Micron after the bell, they did kind of decent. They just got banned by the China stuff and selling, and it's kind of been some of these tensions back and forth. So that's something to keep in mind. Besides all of that, though, the other big factor today, it was that conference with Powell, Lagarde, and the Big Four. That's what we call them. And for the most part, everything they said was very hawkish. That was the overall tone, and that's why it was interesting to watch the market like go up and down and up, because for the most part, the market was going up and they were saying some very hawkish things. How hawkish were they saying? I'll just tell you this. Powell was making jokes about not fighting the Fed, and then Bank of Japan, Ueda, he was saying, I don't know if he was kidding, everybody laughed, but he said long and variable lags could possibly be 25 to 30 years. So just let that marinate for a second. But that was the big deal. It did affect some of the rate hike odds, so I would keep your eyes on that. And now we do have economic data moving forward, and that really is going to be the big thing you're going to see as we move forward here. But it's everybody looking towards that data, and I hate to play that game with you and tell you it's always look to the next one, look to the next one. But the point is, Powell and the central bank, these guys are keeping the same tone and kind of losing their potency. And I would argue that's what they want, so that they don't have to keep messaging markets so much and deal with the consequences every time they talk. So that was a very big one. You see some like budget estimates. I hope you read that one. There was a lot of individual news, and this is what I was referring to earlier as part of the broad effect that we saw today. Don't forget, it's not the official start to earnings season. That begins when the banks really kick it off, but we're getting these companies, and you had big effects out of General Mills. It affected a lot of the food companies, even Jeffries, that was even financial related. All of these came out, and that was big. And I was telling you about those conferences. We heard about the Mobileye one yesterday. Today there was ConocoPhillips, and there was one more. Oh, I put a stream alert out for it, but there was a couple of these, and then that was good. Not to mention just whether it was earnings, guidance, even Snowflake. There was just a bunch of these little updates all tied into earnings, and one sympathy had a big effect on everything else. So watch out for all of the plays. I'm going to give you an update too if you're going to be on stream tomorrow. We've been getting a lot of pre-market movers, but finally, we've already talked about the stress test. We already went over and got that. I told you here this data on Friday. Eurozone CPI could be important because all of the European data has been important thus far, but US PCE, I mean, you already know the vibes with it. It will be big. I think even tomorrow's real estate data, we're going to get pending home sales. And you even hear Jerome Powell tonight at 2:30 a.m. Eastern time, 11:30 p.m. Pacific. All of this could affect it, but this China, Asia stuff, and then just tying it into, U.S. reacts last at our data set, and then pull it into the next data set. Sadly, I think that's what's going to continue, but PCE, that should be the biggest driver, but keep an eye out if the bonds or anything gets sensitive off of any of the data releases, because that's one thing I'll tell you. It's either things are coming in line or they are missing huge. We haven't seen miss huge in a while because now we're watching huge surprises to the upside like real estate. So keep all that in mind, and here's the last point. I'll read all of these for you directly because I like this. This is for the bulls and bears. The bullish talking points where they stand right now. They currently revolve around soft landing expectations, disinflation traction, near peak Federal Reserve policy, second half earnings rebound, and then a FOMO and AI secular growth tailwind. These are the bullish factors right here, right now. As far as bearish talking points and what's bearish right now, it is the whole higher for longer, interest rates are still high, a-hole. There's sticky services inflation, core will not come down, liquidity headwinds, fiscal drag, earnings margin risk, and then, of course, good old geopolitical tension. So thought that one was interesting. Hopefully you like the broader recap. I try to keep it more contained today. We're not going industry by industry, but I got to tell you, there was some pretty big movers here. So this is what kind of made it, touching on a lot of different industries. Beazer Homes, they got upgraded. They went up 10%, and the upgrade was simply based off of the inventory situation with real estate. Pinterest, they went up 6% off of an upgrade. It was from Wells Fargo, and they pretty much said that the whole Amazon partnership was going to be good, and there's going to be good ad loads and all of that. Zoom Info, they got initiated at a buy at Needham, and that's something I'll tell you, you'll see if you're here in the morning, but last couple of days, there's been some massive moves off of these analysts, like coverage, adding this, adding that, especially if it's in the tech space, and especially with kind of how crazy and active people have been with a lot of different things. So that one was very interesting. AVAV, you heard about this one all day. They had their earnings. They ended up doing very good and raised their guidance. Circor, they got a buyout offer, but they're pretty much trading around the price. It moved up in the morning and then kind of chilled out. And then Snowflake, they raised guidance like really far out as well as this year, and people loved it. As far as the big decliners, UNF, again, this one was just another bad earnings. Same thing with General Mills. There was a couple throughout there, and then just a couple of downgrades, and then any of these conferences, they gave some updates, but overall, there was a lot of stuff. Again, UNF, they make like uniforms and stuff. General Mills, they warned about the consumer. These were the things that had a big effect, and I was just telling you yesterday, these consumer plays are kind of a very close second to tech, especially with how things are going. So keep earnings in mind and watching how those move moving forward. But that was pretty much everything as far as outperformers on the day. To give you an idea, the S&P closed down 0.04, the Dow was down a quarter, and the NASDAQ closed up just over a quarter. So anything over or in the green was an outperformer like tech. The best outperformer on the day was energy, then communications at number 2. And then the underperformers were utilities, materials, and staples. They absolutely got washed. So pretty interesting how we held up a couple of leaders, and even I think Tesla. I'm surprised Tesla didn't make it on here once at all, but that is pretty much everything. Again, you get to see all of the dollar and what happened with any of the currency stuff. We already went over the stress test, but the final thing that I'm going to leave you with, it is not going to be the wire. Actually, I need to get rid of this thing. Okay, it's gone, but if you're on stream tomorrow, you'll be able to get it. It's fast. Biotech is going to be my play. I mean, one thing, as much as I want to talk about Redfin, that was something that came up today. I haven't even made a play over the last couple of days here, as we've kind of still been in this range, and I'm still riding those bod plays, waiting for some sort of answer, but I would love to talk about Redfin. It's literally doing better than NVIDIA. Remember, we bought this at $3 for the long term, and it's great, but I'm not a buyer at these high prices. Please, Chad, do not chase the extreme ones, but I don't know. As long as you're not adding it to the long term, just be mindful of all of the real estate stocks. Again, everything from like MPW, SLG, even UWMC, a lot of real estate data and a lot of reactions lately. These could be good plays to trade, but some of them are getting crazy. Again, Zillow, Open Door, they're all going nuts. So watch out for that. But besides that, what I just had up here, I'm going to be watching the biotechs. There's been a lot of FDA data and things happening in the morning. I do have an FDA calendar, so I'm going to find a way to get this to you, but this is pretty much the whole entire list. I don't know. Can you even see it? Yeah, this is everything. You should be able to get an idea. It's all of the plays. So there's a couple coming out in the next day or so. I think like AGEN would be like the next upcoming one, and I might make another video on that to go over it, but you don't even need to predict these. What I'm trying to tell you is, like, lately, in the last couple of mornings, we've got a lot of FDA action and a lot of movers. And some of these off of the morning, I will have one of these reports for you. Again, if you're there on stream, you could find at least one or two easy runners on these if you do want to focus on the biotech. So keep that in mind. That is everything. That's all I'm going to be watching. I hope we see you there. You're not going to get any Powell. You will get a little bit of data. It should be chill. Friday for the fireworks, and then before you know it, more economic data, a new month of July, summer, and then Powell, and then it's almost the end of the year. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, if you want it, go get it. Pick up your mat and walk. If you want to make improvements, it's one part what you got to do. It's another part will. But if you take control of the will, oh my God. So, Chad, I'm sorry, I just get excited. I think it was a good watch list. I get a lot of data. The data gets me excited. A lot of stuff. And it's only summer, but it might start to slow down a little bit. So keep that in mind. But we're going to have fun regardless. Maybe we'll have Chad Vacation Bible School if you're interested. I don't know. Maybe you are. I don't know. Am I getting awkward again? I don't care, Chad. Drink the water. Stay hydrated. Stay healthy. I'll see you in the morning. I love you. God bless you. Amen. Amen. Finger to the sky. That ain't even awkward. It's game time. God bless.